Okay, now here's a chart of Aussie yen that's back in February. And this is not a chart. You can see the timestamp on all the charts that I'm showing here today. This one is one I did recently to prepare for this, just sort of set the stage for what ended up being a real-time calls that we made. We had a significant decline in Aussie yen and a bottom here in late January. We had a 5-wave advance. That tells us to look for a wave 2 correction that's going to hit roughly 50%, maybe 61.8% retracement of this move, and it should occur in 3 waves. And basically that's what we got. Prices trace out what looks like a flat correction, ABC for an A, a B, and then we're looking for a 5-wave decline in wave C, and prices basically gave us that 1, 2, 3, 4, and then look for 5 waves down within the 5th. Ended up being a truncated 5th wave. And so basically, if you're bullish this market, and you would be if you're using Elliott with 5 waves up, 3 waves down, that, and by the way, here's the, hard to see this is 0.618 retracement on this prior advance, 90.04, and the actual price low was 90.04.5. So that's an ideal spot for a low. Now, if you're like me, sometimes you'd like to see a little bit of a break of the downtrend, just in case you're totally wrong and the market collapses. So you might want to wait for a move above short-term resistance and maybe a break of a trend line if you drew a trend line here, and that would come in around 90.80. Now for a stop on a long position there, I typically like to use, if it's going to be a big stop like it kind of would be here, you don't want to risk all the way to the low, the 78.6% retracement is a good level. Now 786 is the square root of 618, and in my experience, it tends to be a level that if the market goes through it, usually it's going to keep going all the way. So if you wanted to, under this concept here I'm showing, you move along around 90.80 and have a stop at 89.24. Now let's see as the wave patterns developed, how we'd manage the trade. We're looking for a 5-wave advance, and the rough upside target would be 94.63, which is this label kind of gets scrunched down, but that's the target where wave 3 that we're currently expecting will equal the length of wave 1, and that's a pretty conservative target because third waves are usually longer than wave 1. So we're going to expect to see a 5-wave advance from this low before expecting even a short-term top. So we can basically hold long from around 90.80. Now, once you start taking out the high, you will raise your stop. And as I said before, the 786 retracement is a good level, in my opinion, for where you can raise your stop to. So that would be up around, I don't know, 90.70 or something like that. So you've already got your stop very close to break even. So we go forward a little bit in time, and we have what looks like a 5-wave advance. Now, if you're a really short-term trader, since we didn't quite get to the 94.65 target, we got close to it, but you might want to take some profits here just in case there's a larger decline coming. If you're a longer-term trader, you can stay with it. Keep your stop down here at roughly 786 this move, and be willing to withstand a little bit of a correction. And at this point, because wave 3 is shorter than wave 1, and this top here, one key rule of Elliott Wave is wave 4 can never overlap wave 1 in an impulsive pattern. So if this is all of wave 3, there's not much room for wave 4 to drop without overlapping wave 1. So that's why the conclusion was that wave 1 was likely complete here, 1 of 3. So that allows for a 618 retracement back of this advance. So you have to kind of be aware and expect that. And we get an ABC decline here, AB, 1, 2, 3, 4, 5, C, roughly 50% retracement. And we see what looks kind of like an impulsive advance. So that would be a sign that maybe the trend has turned up, but we'll keep our stop a little bit lower for now. And sure enough, there was a second zigzag to the downside. And interestingly, it held right above the 786 retracement, the bottom 9107, held above the 786, so we're still good and we can stay long the trade. Prices start to work higher. We get above this resistance at this wave X peak at 93.40. At this point, we will probably raise our stop slightly to just under this low and stay long. We see the rally continues, and by the way, we're using now really timestamped charts from back in March. This is how it's counting it in real time and what we're looking at. So as the market advances here, we have a third of a third wave going, which is usually the strongest, most powerful portion of a market movement. Now, at this point, we would not want to see prices get below 92.12, for example. Realistically, probably this 92.80 area. So we'll stay long and we're in good shape. Now we get a little bit of a pullback, which could be wave 4 of an extending wave 3, as I'm labeling it here. Still in good shape. Looks like the market's probably going to head higher. It pushes up here, completes what looks like 5 waves up from here, arguably completing a third wave. So we're looking for a modest pullback. And typically in fourth waves, you'll retrace toward support at the previous fourth wave low, or another key level that experience shows is important is a 38% retracement of a third wave is very good support usually for wave 4. Now it turns out the market went a little higher, so our long position is still looking good. We started wave 4 from a little bit higher point, 96.50. We get what looks like the triangle at the time, which tells us to stay bullish and expect a fifth wave up to new highs, at which point we likely want to lighten up on our positions or take some profits and maybe just go flat. Instead, the triangle didn't work out. We got what looks like a second zigzag to the downside, and prices still holding well above our stop level, and we're continuing to look for a move up to new highs. We see what looks like an impulsive advance, and we can be confident that a correction has ended here. And at this point, we're looking for a 5-wave advance from this fourth wave low up to new highs to put in a peak. So at this point, a lot of the easy money is behind us, and we don't want to keep risking a lot in case we're just simply wrong about the pattern here. So at this point, what I would want to do is raise my stop up to 95.33, this wave 2 low. If this is going to be a 5-wave advance, at this point, we would not want to see this low taken out. So what happens next? Poof, the trade blows out. This 95.33 level is broken, and something's wrong with our wave count here. We'll exit the trade. So we have a long position from 90.80. We got stopped out around 95.33. That turns out to be a very a good trade. Now, I'll show you the current outlook for this currency now. It's gotten very sloppy. So you basically want to trade when you see a high confidence pattern like the ones that I just showed here. And we don't have that right now in Aussie yen, in my opinion.